After the inflation data was released, the market seemed to be digesting it well until Friday when it all fell apart. Riz and I are going to talk about what to expect this week with the Fed interest rate decision. Good evening, my fellow Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you want to get the most up-to-date, unbiased information on the stock market, do me a favor and get down there and you smash that like and subscribe button and click the bell notification icon to get notified every time we upload new videos here on the Riz Elite channel. But let's get to it. Let's not waste any time. Let's take a look at the S&P 500 here. And, we had the announcement for interest rates. Things were looking pretty good. We came up right almost to my descending resistance line here. And then on Friday, we had a massive red day, giving up all the gains that we had seen on Wednesday and Thursday. Riz, what in the world happened? What caused this massive reversal?
Yeah, that's a great question. I feel I was at that point not expecting, I don't think anyone was. It was a little bit of a knee-jerk reaction to I believe a lot of the semiconductors really dragged it down. Like we had Nvidia come down like 3-4%. It was some semiconductor-ish type news out of Taiwan. And I believe, if I'm not mistaken, it was also stuff to do with TSM, which is Taiwan Semiconductors. Essentially, there's a little bit of I don't want to say panic, but I think people got a little bit spooked with some of the kind of potential for a slowdown in chipsets. A massive increase in supply for some of these chip makers. And I think it was just kind of like priced in all at once a little bit, or trying to at least, because we know a lot of these chip companies, semiconductor companies, have been running quite high, Nvidia specifically to draw attention to that. Like you could see, nearly $500 a share. At that point, it was like, I think almost like over $1 trillion market cap. It's going over like 100 times sales, like, from a fundamental standpoint. It's all kinds of crazy, overvalued, crazy fundamentals, and even technicals with a massive rally this year from I think 140 all the way to a high of 500, right? Like that's even now 140 to, let's say, 440. That is crazy run, and predominantly driven by all this AI hype. That's like 200%, just year to date. So definitely one of the biggest leaders of the S&P 500. Obviously, has been one of the biggest constituents of the S&P 500 index and one of the biggest contributors to this year's gains so far. So that's what it was. Nothing too much to be chalked up to. I think you mix that in with some of the kind of the bullishness we had at the end of or leading into Friday. Not too surprising that the market effectively discounted pretty much the entire week of gains. So will be interesting to see how this week goes. You alluded to that, Chris, how this is going to be an important week by all measures, with the Fed rate decision and all the fun that comes alongside with that.
Oh, yeah, no, it's going to be a wild day on rate decision day. What are your thoughts here? And obviously, we're not going to hold you accountable to any of your predictions, but do you think that they're going to raise rates, or do you think they're going to hold?
So there's two camps. Now I'm going to provide some context first. We know last week with inflation numbers coming out, we know, the CPI was actually up, and we had spoken about it literally 2 weeks ago. And we said, yeah, CPI numbers are coming. I think they're going to be higher than expected. They were already revised higher. Remember when we went to the kind of the catalyst and we looked at what the expectations were? They were already going to be higher, but they actually came in 0.01% or 1% of what 0.1% of what they were already expected. It came up a little bit higher than expectations. The market tolerated that pretty well, but that increase in inflation is predominantly to do with gas prices, and I said that as well. That's going to impact it. It had already impacted the situation with the inflation in Canada, and lo and behold, we see the exact same thing. If we remove gasoline prices, core inflation is actually down. So it's kind of a mixed bag. So I feel like it's important to first provide that information, that context before what I say, which now I feel like with the rate decision coming up on in the middle of the week on Wednesday, I feel like I think they're more likely to hold. I think they're gonna be in a holding formation, or holding pattern, I should say, for the next meeting. So this Wednesday. What they say in that meeting will give me a little bit more of an inkling as to what might happen. Now, we know we've heard Powell talk his jaw off about things, and the market just doesn't care. We know that the market doesn't really believe in kind of what he says or believe the words coming out of his mouth. But he has been saying, we're going to keep rates longer. We're going to keep rates at these levels longer. It doesn't mean we're gonna keep continuing to hike, but he has said we're going to keep them here. So, I mean, as much as the market doesn't want to believe him, and I think he's all kinds of, there's a lot going on in terms of the mismanagement and all the mistakes he and the other Fed, I would say, whatever constituents and Fed people have said, minions, whatever you want to call them. I feel like they've all made a big blunder, obviously, the past year and a half, but I'm not going to harp on that again. What I will say though is that I'm going to take him at his word when he says that yes, we might see some higher interest rate environment continue, and I think that's the right move. I think that makes sense to do, and yeah, whether the market believes it or not is a different story. But I think we might see a pause.
Okay, that'll be interesting to see. I kind of with you on this one. I think a hold right now seems pretty reasonable. I know I've been on the hike 'em more train for a while, but I think now things seem to be cooling off a bit, even though they came in a little hotter than expected. So we'll have to see on Wednesday. That'll be the big catalyst then. But let's keep moving here. Let's take a look at the breakdown for the S&P 500 on the year so far, coming into just 2 more weeks left in Q3. And obviously, with that big rollover in the market on Friday, everything started rolling over. There wasn't anything that was held back up or that, was peaking up towards the end of the week. And this just goes to show you can't fight the market, right? When the market rolls, it rolls hard. And that's exactly what we saw. And all sectors were down on Friday, going into what had been mostly a fairly bullish week. But, we kind of see tech starting to suffer here and starting to come back down. I don't really think suffer is the right word. We came down from a high of about 43% up on the year down to 37%. So, a fairly reasonable move over the last couple of weeks here on tech. But still, we see energy riding high, as Riz alluded to earlier, mostly pushed on gas prices. We'll get to that here in just a minute when we take a look at the asset classes. But Riz, is there anything here that's really standing out to you? This looks more the same to me, like kind of what we saw last week.
Yeah, nothing outstanding in regards to any individual sectors, but I will draw the attention of viewers to the utilities side. Take a look at the utilities side, continuing to mean revert, kind of come back up towards the average, which is kind of the middle, right? Where the S&P 500, if we were to, obviously S&P 500 is not equal weighted, but if we were to draw a conclusion that what's the middle, I think the S&P 500, what's the SPY, that red line, it's kind of coming back up, right? Utilities coming back up. We all obviously have seen energy also come back up. Everything else in terms of financials, real estate, XLP consumer staples, and of course, healthcare just kind of languishing, moving sideways. So with that said, we have kind of 2 camps here, right? We have communications, tech, and consumer discretionary all leading the charge so far this year and outperforming. And then we've had the laggards, everything below that. And then within that camp, we have kind of like a little subcategory of utilities and energy kind of just making a little bit of a push up this entire month so far. But biggest contributor being energy. Energy has really come out strong out of the gate from mid August onwards. And yeah, we had a little bit of a slump on Friday, but I think those two things can continue. There's some talk of oil prices continue to go up and all that, and we'll discuss that in the next tab.
Yeah, well, let's get to that. Let's talk about it because oil is kind of going up pretty steady here, seeing a very nice rise since about the last week of August, just going straight up here. Looks like we closed on Friday at 90.77 per barrel for light crude oil. And gold here pretty much just trading sideways. Really nothing too exciting with gold, if you ask me. Really not much going on there. But yeah, oil definitely the talk of the town. Riz, you're the oil tycoon, as I like to say. What are your thoughts here with the black gold?
Yeah, big bullish breakout for those that really kind of want to go from a technical standpoint. We do know demand continues to be strong. We do know prices as a result are higher at the pump, right? Remember, prices at the pump are not directly correlated to prices at the rack price, like production price, like in the futures market. So in this case, price per barrel, but they're definitely correlated, right? We do know that uh, if we see prices higher at per barrel, usually that translates to higher prices at the pump. So and vice versa. So going to 90, definitely not ideal for the consumer. Definitely not ideal for obviously those that need to fill up uh, gas. Or depending on which way you're looking at it, if you are long oil or you bought oil stocks, or you're long oil futures contracts, or you bought oil ETFs, bullish oil ETFs, then that's great for you. But apart from that, for inflation, for people's pockets, higher oil prices, as a result, higher gas prices aren't ideal. Now, 90 to $100 area is, I think, that crucial point we've seen even in the past, where I haven't used the word demand destruction for quite some time, as we had, oil prices last year at those levels. We haven't seen these levels since 2022, where, oil prices hit like what, 120, 130, almost 124, 123. Yeah. So that was like the high we saw in summer, uh, June last year. We haven't seen that price again. Can we see 100 area? I think we can, but keep in mind 100 is that big, I would say, full dollar psychological resistance. And even outside of technicals, I don't like to get too technical oriented when it comes to oil prices, because we know they're very there's a lot more to it than just these technicals. And I feel like from a supply and demand standpoint, I think we're going to be reaching kind of that equilibrium the closer we get to 100. And then the longer we stay at that area, the more demand destruction we'll see. So we'll see more people feeling the pinch. We'll see at some point OPEC being like, okay, we're okay with these levels. We want to kind of turn the taps on a little bit to take advantage of prices at these levels, because of course they got to make money, right? A lot of the OPEC countries, they're in, I don't want to say entire, but a large portion of their um, income and revenues as a country is derived from oil. So they're going to want to eventually kind of take advantage a little bit. Right now, they've been pressuring prices upwards by cutting supply, but eventually it's going to revert, right? When their price is nice, you're going to want to take advantage of that. And I think that $100 area is that level. People are all over the place, whether they're average pundits on YouTube, social media, TV, or even people in finance, the industry. They're all saying, we could see 100, we could see 120 again. I don't think we're going to see 120 again. I think 100 is that kind of like big, carrot that kind of we might see approach. But I don't think it's going to be sustainable in this economy as we head into the winter months. That's my experience talking.
Yeah, I mean, that 100 level is a really big psychological area, even with oil. And like you've said before, it's prices like we saw back here are not sustainable. And look what happened. They weren't sustained. So everybody up here was like, oh, it's going to 200, 300. I remember, trust me, I was listening to some of those YouTubers and I was like, guys are full of malarkey. And it's just like the same thing here. Yes, we're seeing a push Obviously, it's not going ideal going into the winter months, here fairly soon when energy prices start getting higher for people who need to heat their homes and, not freeze to death. That seems like a good thing. But yeah, I think once we hit that 100 area, I think we see some pretty strong selling there. I think that's a fairly reasonable expectation. We'll have to see what actually happens if it does make it, but I'm with you, Riz. I don't see it making back to 120 without some major catalyst to really
Yeah,
push it
like
there.
yes, that's the caveat there, and I'm glad you mentioned that. Like, if God forbid we see some kind of other war, we see some
Hmm.
major, like we see some major refineries get like striked or drone attacked, like something like that. Like, barring that kind of stuff, because of course that anything can happen. But apart from that kind of catalyst, we I don't think there's any kind of reasonable expectation or reason for oil to be above 100. And I think the closer it gets to 100, the more I personally start leaning bearish, so to speak. Like I just that's just my view again. I know some people will be like, Riz, what? How could you be bearish oil? But at certain price, you could be bearish almost anything. So I feel like,
Exactly.
yeah, I feel like $100 at that kind of area. Now I'm not saying if it touches 100, I'm gonna go short, but the closer it gets there, the more I see this kind of peak out, and the more obviously we see the data, because every week we see inventory levels in the U.S. We see how many oil rigs there are. If there's more oil rigs or less oil rigs, meaning there's more oil sitting in reserve or supply, or there's not as much demand, that impacts prices as well. So we're gonna obviously keep an eye on this every week, but generally speaking, the closer it gets to 100, the more tempted I am to maybe take a little bit of a bearish position.
That's Riz telling you his trigger finger gets really itchy when it gets there. That mouse is just ready to hit that short button, but doesn't mean you always pull the trigger. Once it gets to that place, you need to get confirmation before you take a short or a long position. All right, let's take a look here at the bond yields and the U.S. dollar. I would say that we're seeing a very nice steady increase here in the bond yields. We're still seeing the 2 years over 5% yield on that, which is very impressive. But I would say overall is a fairly generally pretty good week here for the bond market, with the 10 and the 30 year starting to kind of creep back up and starting to close that gap a little bit between them and the 2 year bonds. But I would say the big news here is the dollar. Dollar continues to be very strong, pushing a very rather, very bullish move here on the dollar. Riz, what do you have? What are your thoughts on that? And also, if you're here on our live webinar and you have questions for Riz and myself, now is the time to start typing them in the chat. So please give us some questions for us to take a look at. But yeah, Riz, what's going on with the dollar here?
Yeah, strong dollar, treasury bonds, all the yields are also holding up strong. Bond prices are down, but yields are up, right? So as you said, it's bond prices are down, yields are up, kind of inverse correlation there. But yeah, I feel like the dollar can continue. I said even earlier, I said, if rates are held at these levels, it strengthens the dollar, not directly, but it keeps it at these levels. There's more chances of keeping it at these levels. If at some point in the next year or whenever we may see a rate hike cut, whenever that may be, then you can expect a little bit of a weakening in the US dollar. But keep in mind, what if we see other countries? Remember, the US dollar is compared to something else, right? And in this case, the DX US dollar index, the DXY, it's compared to the major other currencies. So if those currencies weaken and the US dollar can just stay where it's at, by default, just by proxy, the US dollar is going to be stronger, right, compared to them. So it's always this two-pronged thing. If we see other countries cut rates, right, well, guess what? They might negatively impact the strength of their currency, and as a result, that can boost the US dollar compared to that, right? Does that make sense? I feel like it's one of those things where it could be one or the other. Doesn't necessarily mean the US dollar by in itself needs to get stronger. It could be other currencies getting weaker, right? With that said, I think if we see a rate pause this week, with the Fed, then you know what, it will continue to be where it's at. If we see a hike, I don't think might see that, but if by chance we do, oh boy, well, even I wouldn't be surprised if that ends up being a little bit more of a bullish thing for the US dollar, right? So although it's been trending up, we're getting towards that March uh high, so to speak. I feel like this is a solid spot. I don't know if we're going to see how it was back in October 2022.
Yeah, absolutely. And if I'm not mistaken, didn't the Chinese market cut rates, or their version of the Fed? I thought they cut interest rates this week, if I wasn't mistaken.
Yeah, they did cut rates. They've doing a lot of stimulations. China is going the other way with all
Hmm.
this talk of, oh, Russia and China are taking over the world. You see how
Good luck.
these fear mongering things, and the worst part is, and I don't want to piss anyone off. The worst part, it blows my mind, is the biggest. I've actually, it's funny because I mentioned this on social media before, and I think even on the webinar, I said some of the biggest detractors of American prosperity are Americans.
Hmm.
And I don't know if they're incentivized. Fuck, I don't know, like if, there's this psyop going on or some back channels where like, yeah, just we need people internally to keep shitting on America, and we're gonna like, I don't know, send them friggin' PayPal every time they say something bad. I don't know what's happening, but I've noticed it. It's like the fucking contagion, this constant negativity around America as a country, as an empire, as a leader of the free world. And I'm not American myself, and I'm not trying to be patriotic by proxy. I'm
It's
not
fair.
trying
He's
to,
Canadian.
yeah, and I'm not trying to, like, I don't care about like being patriotic just for the sake of being patriotic, because obviously we know there's problems in the country. We know there's problems in every country. I can list off, I could talk for hours on the problems in Canada, right? And I'm sure that the same applies for people in Italy. It could apply for people in different countries all over Europe, even South America, anywhere. So the whole point is that it just blows my mind that there's so many Americans calling for the end of America. It just makes no sense. The end of the U.S. dollar, and how U.S. Is nothing compared to what it was, and China and Russia are gonna take over and eating our lunch, and we're like, I don't get it. I don't understand why. Maybe I can't relate because maybe I'm not in that circle. I don't. Maybe they're in kind of, I don't know, speaking with people that feel the same way. So it's like an echo chamber. I don't know what it is, right? But that's not what we're here for on this webinar. But I feel like
That's true.
it's 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 funny because we see the opposite happening. We see the Russian military. We see Russia's economy get pretty much dismantled last year. Uh, which regardless how you feel about the conflict in Ukraine, whether justified or whether it should be ended or going on, the facts is what I'm talking about. The Russian economy has tanked. The Russian ruble has got decimated. I remember last year they're like, everyone convert your US dollars to Russian rubles.
That was
And I was like, first of
ridiculous.
all, you treasonous fucks. Like,
Yep.
again, I'm being very blunt, and I don't give a fuck if YouTube flags this or people report this or there's like Russian bot farm coming in after me, but I don't give a fuck. But my first thought was, you treasonous fucks. Like, first of all, I don't care if you want to convert some Russian ruble if you want to go visit Moscow, but like the way they're talking about it, like, what fuck, Russia's taking over and Vladimir Putin this and that. I'm like, okay, look, I know Russia is fine, like the people are fine, the country is fine, but stop going on in this kind of rabbit hole of, yeah, the US is crumbling and everyone go to the Russian ruble, which fucking absolutely is decimated. And then you look at China this year, and they've got bankruptcies in their major property market
Yep.
financiers, property investment funds. They've got rate cuts happening. They are literally, I kid you not, the Chinese government, the CCP, sorry, fuck, is literally going out and buying stocks to try and stimulate the economy.
Yep. I saw that.
They've cut the tax rates on capital gains and stuff like that. So they're literally directly intervening. Like, that kind of stuff is socialistic stuff. So like,
Oh yeah.
I know people that applaud that kind of stuff. So they're like, yeah, China's doing things right. They have so much control over the people, and nah, man, like, that's socialist as fuck. That's communistic as fuck. Like, that's not our gig. That's not our game. But they're suffering. They're suffering. I assure you, the people are feeling the brunt of it. We may not hear about it because China is so closed off and opaque in every aspect. Whether it's the data they release, it's all fudged, it's all made up. Whether it's what we hear from people in China, whether it's mainland China or people rural China, the stuff we hear is very, very suppressed as well. So for the little accurate information we do actually get overseas to this side of the globe, I assure you it's not the full picture. And I'm not saying it's all bad, but there's some major cracks there. So it kind of turns the entire narrative upside down of the U.S. Is no longer what it used to be. Maybe it isn't, but guess what? No country is really what it used to be, and this is part of life. Like like Chris, like I'm not what I used to be when I was 20, right? Like even from a trading standpoint, like like does that mean I'm worse? I used to think that, but actually I'm not. And there's always this doubt. But anyways, I'm going off on a tangent, but I think it's important to understand that we can look at the data, we can look at facts, and it actually goes counter to what many people are saying, which unfortunately many of them are actually American. So I don't fucking know. Maybe they aren't American. I don't know if it's some like I said, from the stuff
Who
I see.
knows?
And I
I mean,
think
who knows at that point? But I'll just take the line from The Dark Knight. Some people just want to see the world burn. That's
yes,
that's the best line I can come up with that.
that's
Uh,
perfect.
and yeah, that's just some people are just about that sort of thing, and they get a
But like
platform and they run with it.
why again, I know we're going off a little bit. Maybe it's entertaining for people, maybe it's not, but that's why I apologize for those that really want to keep it market related. But I just find it why watch the world burn, but why have it you like why be in like a farm and then be against farms in other countries? Okay, but if you're against farms in your own country and you're against your own farm, you're the one who's going to do the burning. Like I don't get
Because
it.
they don't think it's going to be their farm that's going to get shut down. That's the trick.
So
So if
everyone but themselves,
exactly,
everyone thinks
exactly.
they're immune.
It's ridiculous. I don't get. Yeah, I'm with Jeff on this. Jeff is saying he doesn't quite get the rhetoric. I don't get it either. But it's one of those things. You can even see it in the stock market. Some people are just contrarians for life. It
Yes.
doesn't matter what direction the S&P 500 is moving. They're like, no, I'm always long or I'm always short. It's the same concept, just put into nationalistic views. That's really the
Yeah.
best way that I can describe it.
No,
Uh,
I agree, and that's a good analogy there. I feel like being contrarian is fine, but contrarian
to a
for a
degree.
reason,
Yeah.
right? Contrarian for a reason is the important part. Being contrarian for the sake of it is actually not contrarian. That's actually, I would just say borderline negligence, right? And
It's fair. It's
stupidity.
fair.
I feel
But
like
all I'm going to say is anybody who thinks that China's doing it right, you can still get a plane ride there.
yes, and that brings me back.
Go
I
for it.
so brings me back, and I was just gonna say this. You beat me to it. I was like, because I get people on social media be like, Riz, this is all done. Because I'll post something and maybe they'll interpret it a certain way, or they're just gonna have to come in and chime in, or maybe they're
Mm-hmm.
Russians or Chinese. I don't know, psyop. I don't know, whatever they're doing. But like, I'm like, okay. So first, number one, convert all your USD to Russian rubles. Number two, make sure you get that plane and make sure you get into Russia or China, wherever, and then just send me a message and let me know when you're there. And then
Yep.
I'll touch base with you in like 6 months or a year. And then, we'll reassess how the US is pretty much completely done and how Russia and China are completely dominant and taken over everything. We'll touch base.
Yep.
I have not, for the few people that I've had this kind of conversation with, not a single one has actually gone ahead with even converting all their US dollars
Uh-huh.
to Russian ruble, let alone taking a flight, let alone actually moving there. So I feel like, come on, like people got to put their money where the mouth is.
Yeah, take those pictures from Tiananmen Square. I would love to see it. Or from the Kremlin. Take that selfie. I want to see it. I'm feel free to post it down in the comments. I'd love to see it. So if you think that the world is burning and you think that that's what's going on, please feel free to leave us a dislike. But if you think that the dollar is not going anywhere anytime soon, make sure you smash that like and subscribe button for me. Would really appreciate it. Let's go ahead and take a look here at the big dates for the weekend. There really is only one, and that is the Fed interest rate decision on Wednesday, the 20th. Building permits, sure, that's cool. It's not going to do too much to the market, but this will. When Powell talks, the market moves. There's I'm sure we could make plenty of interesting rhymes with that one, but we just won't go there right now. But yeah, this is going to be the big catalyst this week on Wednesday, and otherwise it looks pretty quiet until next week. Looks like we got the PCE and GDP growth quarter on quarter, so that'll be interesting next week. But this week it's all about the Fed interest rate decision.
Yep, absolutely. And it's going to be volatile, as we all know.
Mm-hmm. Yep. If you are in Elite, all I'm going to say is it should be interesting. And if you can, be on Discord while it's going down. You never know what Riz might be doing. He might be live streaming. You never know. That's always fun to watch. And you can always watch me egg him on if he's doing that. So that's always a good time if you're a Elite member. But yeah, I'm waiting here for some questions from our Elite members. I think everybody was so hooked on your monologue there, Riz, that they forgot to type their questions in the chat. So guys, leave something here for Riz. Let us know what you want to talk about and what you guys are looking at this week. Riz, let's while they're typing, what effect do you think this UAW strike is going to have on the market? Do you think that's going to push auto stocks further south, or do you think it's mostly overblown?
Yeah, no, I think it's a genuine concern. It's an issue. It's like what I think 120,000 auto workers in the US, I think,
That's a lot.
comprised of GM, Ford, Stellantis, which is like, the Chrysler and all that kind of stuff. But yeah, it's sizable. Honestly, it's sizable in what they're asking. I mean, I get it. I mean, the union subject is a bit tricky. Like, I mean, but in this case, from what I've done, like the basic due diligence, nothing in depth, from what I've read, basic, I feel like, man, they're asking for a lot. I think they want, like, I don't know how much of it is exactly true, but I feel like I think they want to work like 4 days a week, and they want like a 50% rate increase in wages or something like that. Like, it's kind of tough for to swallow, to have that all at once, right? I don't know how much of it is accurate or true. Yeah, like apparently, so like right here in chat, Orlando is saying, average disparity is 200%. I mean, see, that's the thing, right? Like, they can ask for something, but does it mean it's gonna make it possible? So like when you ask for the moon, sometimes you might, get some, yeah, but look what you're asking for, right? Like, it's tough. So can it impact these auto companies, auto stocks? Yes, obviously it has already. I think it continue to. I think more than anything, if this negatively impacts supply, so that's the issue, right? So we know car prices also can factor into inflation, cost of living, yada yada. But here we are once again faced with a situation where if this continues, if this strike continues for a prolonged period of time, that obviously negatively impacts production of these U.S. vehicles, predominantly sold in the U.S. And that impacts, supply. And that, what if that pushes up prices for new cars again? And what if that pushes prices up for used cars as a result again? So I'm not quite at that point where I can say it's going to happen. There's, it's too early to say that, but I feel like that's one of the risks if this continues for a prolonged period of time, right? So let's see, but it definitely is a sizable amount of the workforce. It's definitely not a. I don't think it's not something we can just completely put under the map.
So Oz has kind of a follow-up here. It says, say they do, cave and give them this ridiculous pay raise. Do you think that would affect the economy as well? Because, I mean, if that's the case, wouldn't car prices have to go up to kind of cover that?
Yeah, so it's kind of like a double whammy. Are the manufacturers going to, pass on the increased costs of wages to the end consumer, and as a result, increase prices, and as a result, also increase potential inflation? But then on the flip side, if you have this strike going on for a long time, and then production is low, and then supply is low, while demand stays the same, then that increases prices too. So like, you're kind of fucked if you do, fucked if you don't, from an economic standpoint. It's a bad, really tough situation to be. I would hate to be the people in the room trying to negotiate this, iron this stuff out. It's a big thing, obviously, but I feel like, oh boy, it's another hurdle for the inflation thing. the whole inflation thing from that standpoint, it's another hurdle. Because whichever way you look at it, maybe prices go up for the cars. But on the contrarian standpoint, to really go back to the contrarian thing is, and I swear it's not contrarian just for the sake of it. The contrarian view is that first of all, these automakers have actually made quite a bit of money on their legacy vehicles. None of them are making money on their electric vehicles, but their legacy vehicles, they have been. Why? Because they've increased prices. A lot of the prices that they increased on their production vehicles are directly going in their pocket. You know, it's inflation, but they actually jacked up prices significantly. So they're making more money per unit sold. So they've done well. Now the question is, reasonably speaking, if they've done so well and the union workers are wanting to get more of that pie, essentially that's what they're saying. They're saying you guys have made so much money, but none of it's kind of trickled down or come to us at all. So all you guys at the top level, whether it's the CEOs, management, all you guys have made the brunt of the actual profits that they've seen in the last year. Why? Because the prices went up, right? Now you can chalk it up to either greed or actual their costs were actually up is debatable. Most corporations that have increased prices, yeah, they saw some of their costs go up. Whether you're car manufacturer, whether you build widgets, or whether you build computers, desks, whatever, costs did go up from a supplier all the way down to the end production and retail side. So yeah, the prices went up, but a lot of it were actually just price gouging, and that's what we saw. Inflation. Everyone kind of jumped on this bandwagon. Oh, inflation, so we're going to increase our prices too, and we're going to increase them. We're going to jump on this opportunity. Right? Like you know how you give an inch and then they take a leg, like you know what I mean? They kind of take an arm. So that's exactly what it was. So I kind of get why the union workers are kind of upset, but their demand is pretty lofty. So we'll see how it shakes out.
That's fair. All right. So Jeff has another follow-up question to the auto strike. He said, any possibility that enough people's cars get repoed due to loan defaults, and then the used market backfills with supply? I'm going to go ahead and say no on that one. That seems a little bit far-fetched. But Riz, what are your thoughts?
So we've seen repos go up in the U.S. There are more repos, but the thing with repos is that the demand is for used vehicles is still there. It's higher. It's definitely drying up now with rates. You know, if you want to, someone wants to finance a used car, and I mean, like if it's like a couple years old, at current rates right now, they're looking at like 9-10%.
Oh, it's insane.
Wild. Like to me, I cannot justify that. I'm sure people are still doing it, but that's definitely cooling it off, right? We are seeing a slowdown in loan origination, meaning there's less new car loans compared to this time last year or even this time 2021, right? So for sure there's less new purchases or car purchases going on because of the rates. Now, will repos impact that significantly? I don't think it's enough repos to make that, you know, backfill supply. I don't think it's enough repos. And if there are enough repos happening, oh boy, we got a problem. We got another problem besides just car prices. Right?
No kidding, right?
You know, we're gonna be looking at the domino effects for housing, and you can't repo houses, so they're gonna have evictions and forced selling, and like, oh man, like you know, what's the default? What happens when someone defaults on a mortgage? They can't pay it.
Yeah, so you
foreclosure.
get to foreclosure.
Foreclosure, yes. Okay,
and then
that's the word.
Can have short sales, and you know, you got HUD getting involved.
Yeah, the bank has to. Yeah, bank kicks over, you're out, and then they got to offload the property quickly. Yeah. Okay, so man, that would be a whole nother issue, right? So, yeah, good question, Jeff. I like the way you're thinking, but no, I don't think enough repos to backfill.
Fair enough. All right, let's shift gears here. Abhishek says, how do we feel about value stocks like Nike and Starbucks? Should we wait until the rate decision to position ourselves, or should we go for it? Nike looks like it's taken a bit of a beating here this year for the most part. Pretty red, if you ask me. I wouldn't be taking this thing long, and I'm not a huge fan of Nike. Let me pull up Starbucks real quick. You can take a look at that, and then we'll get Riz's opinion. Starbucks, you know, a little bit better, but still, you know, kind of a rough year for Starbucks. Still technically down, red on the year. And if I recall correctly, Starbucks has been closing some stores as of late.
Yeah.
But Riz, what are your thoughts on Nike and Starbucks?
Yeah, so both these I wouldn't call them value stocks. Um, but I think, they're kind of at these levels where they're depressed. They're not the high flying tech stocks, right? They're not the high flying like semiconductors and stuff like that we've seen. So definitely at this point, we've seen this 96 area be a previous kind of like support for Nike. So that's one thing, right? It's definitely been oversold a little bit. You can see that from the RSI standpoint, and Chris has done that great circles to outline what I'm talking about there. You can see the RSI is also oversold. I think for a starter position, this is not bad. Remember, when these kinds of economics, I don't want to say economic, but like market structure plus with this technicals chart and obviously factoring in the fundamentals, I'm aware of Nike fundamentals roughly. I think it's not a bad idea to take a starter. The only caveat here is, and you mentioned it, Abhishek, that we have the rate decision. So it shouldn't directly impact Nike price too much, but if let's say whatever Powell says or whatever the decision is, if it goes crazy in terms of volatility and it negatively impacts market significantly, well, yeah, then it's obviously going to factor into Nike prices, price of the stock. So just be aware of that. But as a starter, not too bad. I've been keeping an eye on it. It's definitely been oversold. And with earnings also coming, when are they coming? Middle what?
Right at the end of September.
End of September. So we got literally roughly 2 weeks. So keep that in mind as well, right? The dividend's already done, paid. So yeah, definitely a good, interesting setup. Something I've been watching myself, but couldn't bring myself to pull the trigger on.
And let's pull back up on here on Starbucks. Oz also added in. Starbucks has also been fighting a lot against unionizing.
Yeah.
Do you feel that that's bad for the stock as well?
Yeah, so I'll answer both. From a technical standpoint, this is once again, a good area to kind of consider a potential long. Just be careful. This is just kind of 94, 95 zone. It's key break below, just from a technical standpoint, would be pretty bad. Hence why I say kind of starter. But obviously keep an eye on it. You have to decide before you get in the trade, are you okay dumping this, taking the loss if it goes below that 95, 94 area? But that's up to you. From a union standpoint, looking at that, yeah, definitely for the bottom line, it's not good. Starbucks is pretty generous in their compensation, in their incentives and benefits to their employees already. So they're pretty good in that. But as far as unionizing and employees and unions wanting more and wanting to have more locations unionized, Starbucks has actually been actively fighting against that by shutting down stores that they feel they're getting even a whiff of unionizing. They just don't want to entertain that at all. So is it bad, for the stock? Somewhat. It's definitely not ideal for the business. It's definitely not ideal from an optics standpoint either. They've been getting a lot of heat for actually closing down stores just because of this prospect of unionizing at that location, right? So definitely not a good look. But hey, from a technical standpoint, it's somewhat decent.
Fair enough. Fair enough. All right. I want to jump to Jeff's question, then Abhishek, I'll get to your second one. I think that'll be a good one to close on. Jeff wants to talk about DraftKings. Let's bet on some sports, shall we? He says he's long. He has covered calls in profit. He's considering shorting some puts as well. As the chart looks rather bullish, I have to agree with you for the most part. But it's considering the possibility of less discretionary income. I'm tempted to stay more conservative. I think in this market, that's a pretty fair place to be in. But Riz, how do you feel about doing some short puts on DraftKings?
Yeah, you're right. This is definitely a bullish setup. I feel like it's a bit overdone though, so I do feel like, yeah, there is some downside. It's had a massive run from middle of August to now, right? So even compared to year to date, as Chris is showing, that's a big move, right? That's a big recovery. As far as going to do some short puts, again, it depends on the strike. Implied volatility is a little bit higher after Friday's move, but it's still quite low. I'd have to really look at the strikes come Monday to make it, worthwhile, to see if it is worthwhile. And going long, not for me. Uh, Doing covered calls is definitely the right move. Um, but you want to make sure you're not doing covered calls and then stuck holding in. What if it kind of like rolls over, right? It could roll over. Look at this 32, 33, 34 area, um, right? From start of August, right? So you're up against that. So be careful. You don't want to be stuck just because you have covered calls, right? And then short puts, kind of a different question altogether. I wouldn't feel comfortable with short puts just yet, unless the strikes and the premium makes sense. If I look at it from the start of the week.
Fair enough. All right. Now, this is a great question, I think, to go ahead and end the webinar on. Oops, I typed the wrong thing because typing and talking is hard. Abhishek says, how crucial do you think student loans resuming will be for consumer spending? I'm thinking that if you have loans and you haven't been paying on them since, well, the start of the 2020 thing, you're going to end for a rude surprise when those loan payments start resuming. And yeah, I think that's definitely going to cut on consumer spending. But Riz, what are your thoughts on this?
Absolutely. Absolutely. This is something I think is going to have ripple effects in pretty much every part of spending. So whether it's discretionary spending, whether it's pretty much housing, whether it's everything, even the amount people spend uh, on needs, right? Because they just won't have a choice. Like, what are they going to do? And there are some more programs in place. So, like, there are things if people look into, like, if you have a student loan and you're in the U.S. and you want to look at your options, because there are certain things that or certain programs that are in place to allow you to kind of like give you a little bit more of a relief. They are continuing or starting up again in October, but net result, if I had to chalk it up to one or the other, I would say yes, definitely bearish for consumer spending, all spending, and discretionary income or discretionary capital is going to be very much down. People are not going to have as much money to spend on their wants, let alone their needs, right? So we've also seen different metrics that a lot of the money people saved from 2020, 2021 because of, shutdowns and all that kind of stuff, all the kind of incentives and the stimulus and all that kind of money that they were able to get and save and keep and even potentially grow if they invested, right? They're now kind of reverted. That's reverted. Like that's been gone. That's been spent or used up, right? So now I think after this so far, this entire year, the 9 months of rate hikes and sorry, Chris, is it 9 months? We've had rate hikes from last year, right?
Yeah, it was last year.
Yeah, so I'm losing track of time. So like ultimately this year and a half, let's say, of a rising rate environment, after all this, after costs being up, aka inflation, now they're finally kind of depleted all the excess money that they had saved up or gotten due to 2020 and 2021, right? So it's only now things have kind of equalized. Where we go from here, where the consumer goes from here, that's going to be the big tell. And that's going to directly impact the economy and the economic data, which is a bit lagging, obviously, right? So that's now it's going to start getting interesting. That's why I said Q4 and obviously 2024 is going to be that time where we see the economy either take a turn for the worst. And again, I'm not trying to fearmonger, or it proves to be resilient and kind of holds up and then eventually kind of maybe goes into like a growth mode at some point. But again, I'm kind of leaning in one camp and I'll leave my thesis in that for elite members.
Fair enough. Fair enough. If you aren't an elite, you need to make sure you check the links down in the description for when we decide to open elite back up again. So get on that wait list if you're not on it already. And yeah, seems like it's going to be a pretty interesting week. Be ready for Wednesday for the rate decision. That's the big thing to keep an eye on this week. As always, Riz, it's an absolute pleasure having you on webinar. Thanks for coming out.
Absolutely. Thank you for having me, Chris. Fantastic work, everyone. Thank you, everyone, for joining, your commitment, and obviously being part of these webinars, and for your support. If you're watching on YouTube, thank you so much. Please comment, like, share. It really goes a long way, and I appreciate that.
Definitely. And as always, we'll see you in the market on Monday.